Okay, what we're going to do here is we're going to take a look at a Canadian stock called Telus. Ticker symbol is T on the TSX in Toronto. This is a long-term chart, and a couple of things of note. First of all, Telus had a major top, of course, in the NASDAQ technology bubble in the 1990s, and it fell from about, I guess that's about $47, and bottomed somewhere in the $5.50 to $6 range in October of 2002. Now, a point I want to highlight, first of all, there's your double, almost a triple top right there. That's a major sell signal. You can see the trend line there. And then if you were to go a little bit further and draw another trend line, it stayed in this downtrend channel for pretty much 2 years. A point of interest, by the way, based on long-term history, the first 2 years of a decade tend to be the worst. Even though this is now 2008 in November, a lot of people are wondering if the year 8 isn't the worst. But getting back to the point, bear markets tend to bottom in October, and that's exactly what Telus did. And then it went on quite a phenomenal uptrend. So the first point I want to highlight is by making the trend lines, and it only costs $1 to buy a ruler, you can see there's your downtrend line, and as it gets down towards the bottom, this is a little bit hard to see here, but I have another chart that I think will highlight this better in a minute. There's a shoulder, and a head, so that formed a head and shoulders bottom. As the rally gets going, you want to draw a 45-degree angle. That tends to be the support for a rally. Now, as a rally gains momentum, you just redo the chart, and you can do these long-term charts, by the way, at bigcharts.com, or you can do shorter term. Generally 3 years is the maximum at stockcharts.com, and you can see here that it touched right there, the trend line. And then many years later, that's probably 2008, at some point, maybe early in 2008, it hit the trend line again. But here, you draw another trend line. When stocks violate these greater trend lines, that means that the rally is starting to be questionable. But you don't want to get out. You want to give it a chance and see. You know, if you bought down here, you'd make quite a gain to this point. So you're not really in a panic to sell. And then it bounced off this trend line here, gained even more momentum. Now, some big considerations right up here that I want to highlight. The first is there's a very big gap that formed in the chart, and gaps tend to get filled. And you can see that it gapped up, quickly gapped back down again, gained more momentum, formed a double top. That's a very bearish pattern once it's violated. And you can see here, if you're just following the mouse along, again, how many times is it hitting this trend line? Now let's go back to the beginning. This is your major trend line right there. This is a secondary. And then you've got a third trend line. If you were to have drawn a fourth, you would have been out of the stock somewhere around $63, $64 in that range. And then on the way back down, it violated one trend line, violated the second, came back, tried to regain, it couldn't, went down to the third, tried to get above, it failed. A few times here it tried to get back above, but I mean, it was all over but the crying. So just to repeat again, this is really important. It's one of the simpler techniques to protect your profits. Major trend line, second, third, you could have drawn a fourth, plus of course you had a double top here. That's a very bearish pattern. And each time it broke down, it broke through the first trend line just like a hot butter going through a knife. So there was no support there at all. This one that tried to, couldn't recover here. Warning signs all over in the chart that a major top had been put in place. Now, a couple of items here that I want to highlight. First, it might be a little bit difficult to see, but I'll try and highlight them as we go. First, here's the downtrend channel going from the initial top. This is going to be your support line on the down channel. Here's your resistance. Now, what's important here, first look down here. This is called the MACD, which is a moving average convergence divergence. What you're going to notice here, see how the MACD is downtrending, but the stock is actually going up. That is a huge warning sign. You can't see it here really well, That's the RSI, which is relative strength. The bottom line is, if a stock price is going up, the internals should be supporting that. And you can see that as we were going up, making this top again, and you can see on the second time it actually made 3 little tops along with the other top over here. The MACD did not confirm it, major warning sign. That generally means that the stock is probably being manipulated higher and the professionals are dumping it to the late arrivals. The RSI also, even though you can't see here, but if you go on the stockcharts.com you'll be able to see this, the RSI also did not confirm the second top. So the internal momentum was not actually there. Now, a really important point right here, this is the 50-day moving average, which is the blue, and the red is the 200-day moving average. You have a term called a bear cross, and it's a major institutional sell signal. When the 50-day moving average drops below the 200-day, and that was probably in the $48, $49 range, somewhere in there, maybe $48.50, major sell signal for institutions. And you can see it's very obvious now how many times it's hit the bottom part of the channel, how many times it's tried to get to the top. Kind of a point of interest, by the way, hit the top there. Here it didn't even make it to the top, but it sure made it to the bottom. Here didn't make it to the top, but it's working its way back to the bottom down here again. Okay, this chart here is a little bit small, but it's really going to highlight this point really well for you. Again, you can see here, here's the double top. When it went to the secondary high, the RSI trending down, MACD trending down, and the slow stochastics, a little bit hard to see there because it's so small, but you can see the blue line that I tried to draw. The bottom line is, if a stock is going up, the indicators should be going up with it. If they're not, that's a warning sign to pay attention. This is a really good representation. There's your long-term trend line going back over a 3-year period. You can see that the angle really gained a lot of momentum. You should have been theoretically highly motivated to sell right in that range there. And it maintained the secondary channel on the rebound. 3 times it tried to break out, it couldn't. Went down to support, it fell below that long-term trend line, came up, hit it, and now that becomes resistance before it was support, and then of course down she went.